Good morning, everyone. It is 6 a.m. on Friday, July 19th. Half an hour before the market is going to open, and we've had a couple of exciting days. We pulled back, or I guess more mean reverted on the S&P down to a key level at the EMA 20. QQQ did the same thing, except it broke through that EMA 20, and it did hit this horizontal support right here before bouncing back up. So maybe we won't hit that MA 50, but chances are that we probably will. So, what could go against that? How could this play out? Well, when we're looking at the Dow Jones was moving up parabolically, and money was leaving the semiconductors and technology stocks and going into the Dow Jones and into the small cap stocks. Over the last couple of days, those two came down pretty hard as well. So if that continues, then conceivably that money could come out and go back into the technology stocks. When I look at SMH did come down and go through that MA 50. So it's possible that semiconductors bounce from here. We're not going to be too sure of that, or we're not really going to count on that unless we break back above the EMA 20 and EMA 8. And so we're just going to sit and wait because we don't want to make an assumption here. We really don't know how this is going to play out, but how this plays out is going to determine how the rest of it plays out, simply because semiconductors is what was responsible for the huge run up in all the major indices, at least since uh, the beginning of this year. So we're just going to sit and wait and see what happens. Now, we do have a more probability, a higher probability of us coming down and breaking these key levels. But again, we're going to wait and see if that actually happens. So yesterday we said, okay, we closed near the highs on VIX. So this picture right here is we're sitting at the EMA 20. QQQ is at a weak support and heading down towards a stronger support. IWM is mean reverting towards the EMA 8 and maybe EMA 20. The Dow Jones is mean reverting also to the EMA 8 or EMA 20. The last two have a lot more room to go down. The QQQ, if it can break this weak support, has room to go down. So the SPY is really the only one that's sitting at a support area. And there is a weak support just below it, the top of this box right here. And when we called this top, which was when we did it, was the same day that it basically touched that top. We said, well, it's not going any higher. We're probably going all the way down to that 540. So that 540 level is still a pretty good level. By the time we get down here, our MA 50 may be more at that 545 level. Today's options expiration will give us a lot more information about whether we think that 540 still stands or that 545 is going to be more likely, or if we think we're going to bust right through it. So basically, today we just really want to wait for more information. We don't want to make any big bets. We don't want to get off sides. If we do anything, it's going to be a tail risk trade. It's not going to be a main position, and we're going to allocate very carefully and just make sure we're not taking a huge risk on it. So far, we are basically waiting to see what happens here. If we go and look at our futures, futures are random. So they're doing the same thing. They're just waiting to see what will happen. The S&P 500 up 10 basis points, so basically nothing. The Nasdaq is up 15 basis points, also basically nothing. And the Dow is down about 20 basis points, and that's still random. So all of it is random, and I've got conflicting directions in the Nasdaq and the Dow. So what I said a little bit earlier about money getting sucked out of the Dow and going back into the Nasdaq, that's possible, but with these random numbers, I wouldn't read too much into it. Just the fact that the Dow is negative and the Nasdaq is positive. So we really do need to see. It could be a day where we just chop sideways. Why? Because we had a huge move from Wednesday to Thursday and another huge move from Thursday to Friday. Normally, we have a pause on after big moves like this. Big move up, pause, pause, resume moving upwards. And then let's see. This one, it was more prolonged, big move down, pause, down, pause, down. So we had pauses in between. And here we big move up, pause for 3 days, and then we started going up. So normally after large moves, it is not unusual for us to just chop sideways a little bit. And it being a Friday and probably people more focused on options expiration, it, we could just chop sideways, in which case we would get to see how everyone is positioning themselves on the new options. And we would just wait for the weekend. So I'm not expecting huge, big moves today. It will be important to see how well this EMA 20 holds on the S&P. But if we just chop sideways, we're not going to get any new information. And so it's really going to be if we break directionally or if we move up significantly, but that would have to go above this 560 level for us to really be confident, or not confident, for us to be kind of interested in that move. And that would be completely undoing yesterday. And I just don't see the strength in the market to do that. What's interesting is when we look at the VIX, it's higher. It's higher than where we closed yesterday. Even though we already have this weirdly, this is probably a misprint, but we have this huge red bar, but we'll just call that a misprint and just say we, at some point earlier this morning, this was higher. And now we're where we are. And where we are is still higher than where the VIX was yesterday. And my SPY is flat, but barely tiny bit up on the pre-market because of those futures. So the VIX is telling a different story where the S&P is flat, the VIX is up. Even though it's not up a huge amount, it is up a non-insignificant amount. You see that? It's up 0.75%. So we'll see. So right now I'm leaning slightly towards moving down, at least at the open. I don't know if that'll sustain through the day because if I move down towards the open, I could simply just come back and retest that EMA 20. It doesn't mean that we're going to keep on breaking down below it. It could, but again, right today feels more like a chop sideways type of day. That options expiration is really going to be important for a lot of dealers today. So we have the, is it quarter? It might, let's see, January, March, April. No, it's not the quarter. So, but it is still a very important options expiration just because of where we are in the markets. So we're not going to make any huge bets. We're just going to watch and see how this market develops. Let's look at the rest of it though. TLT. TLT starting to move down. We have a gap down this morning. That's going to put pressure on stocks. That's going to prevent them from moving significantly higher, if not actually help push them lower. And then there's something else I want to look at. Oil. Let's look at crude oil and energies. Oil floating downwards, but looking like it's hitting its horizontal support here. Want to see how that translates to energies. Energies moving upwards. We did kind of pull back from highs pretty sharply yesterday, but it looks like we are up again this morning. So Energy's still looking good, but I would be a bit cautious at the moment with energies. When we look at gold, gold broke out of these highs and then came back down perfectly to these highs. And then pre-market we're way down here. So it doesn't look like that gold is going to follow through on that breakout, at least not this time. If we bounce off of that EMA 8 or 20 or 50, then we might start paying attention to gold. But right now, because of this gap down that's going to happen pre or right when the market opens, we're just not going to be interested in gold or silver at the moment. Yeah, same thing, silver. Silver breaking down and at the open, it looks like it's going to test this horizontal support right here. Okay, so I'd be very careful. No directional bets. I was going to look at sectors, but there's no point because basically we're going to be sitting on our hands and we'll get even better information later on. So the only thing I'm going to look at is the 90-day highs and 90-day lows and see how those numbers got updated. So we got even fewer 90-day highs than what we were looking at yesterday. Yesterday, after the close, this data, there's a delay. So when we looked at it yesterday, it was in the 90s, and this was still in the 20s. So this got updated. And so over the last few days, we went from 646, which we said was overstretched. We said that has to come down, and it came down to 296. We said, well, that's not quite enough because the normal pattern of momentum is to keep on going until we hit extremes. So that 296, we said it had to come down to somewhere between 1 and 200, and we skipped directly down to 67. In the meantime, the 90-day lows were just they haven't been ticking up. So what that tells me is, yes, it is possible that we pause here and bounce. That would indicate a relatively strong market. But if momentum continues, then what will happen is this 90-day high will stay in the two digits, maybe 30, maybe 50, maybe 10, maybe 20, maybe 80. Doesn't really matter. But the lows will start ticking up from this very low number. We'll start to see 100 and something, 200 and something, 400 and something before we see the bounce back. And then there will probably be a period of consolidation, in which case it doesn't really matter what these numbers are. They'll be pretty much equal on the highs and the lows, or we might see a disparity where one of them is at 100 and something and the other is still in two digits. Either way, it doesn't really matter. We would be in a consolidation period. So just based on momentum, then we would expect this to continue to move downwards. However, if it is a very strong market, then this is it. We mean reverted to the EMA 20 on the S&P 500. QQQ broke that MA 50 and found a support right here. And if we just chop sideways, then that MA 50 can rise and then it'll have touched the MA 50 and then it can move back up. That would be a very strong market. And I don't think we're in that environment right now. I think there's a lot of uncertainty that is building up. We're starting to look at elections a lot more carefully, especially after assassination attempt. So there's just a little bit more uncertainty in the markets than we would normally have at this period in time. And that is giving me less confidence about a bounce from where we are. Again, the picture could completely change after options expiration. And so we just really want to wait for that options expiration and see where money goes afterwards before we try to form too clear of a picture or get into too many details or really start positioning ourselves. So for now, we're staying neutral in our portfolios unless we take a tail trade here or there. And then on Monday, after we get better information, we can start allocating, or we can wait one more day because sometimes it takes a little bit of time for institutions to allocate their money enough for us to see a clear direction. So sit and wait. Today shouldn't be too hard because I'm expecting a relatively mild and quiet day. If I end up being wrong, we're not positioned anyways. So you're in a neutral or all cash portfolio for the time being. And then you don't have to worry about it. So I would say enjoy your Friday. Keep an eye on what's happening in the market if you want to, but really all the information and the decisions are going to happen after the markets today. So over the weekend or after we get more data on Monday. So there's not that much to talk about else since we're just sitting on our hands. So next week, after we get options expiration and we see where money is allocated, then the normal things will kick back in to the market. So what types of reports we have, and then also the earnings. That's it for today. Have a wonderful rest of your day and weekend. We do not have a post-market review on Fridays, so I will see you guys on Monday.